Hello everyone, hope you had a great weekend so far. So in this video, I'm going to run you through the weekly forecast I've done over the weekend. So if you're someone who likes to watch the video to learn about my trading forecast, this is for you. Alright, so to begin, let's first take a look at our forecast for Euro against the US dollar. Alright, so right here, Euro dollar continued to face resistance at the neckline level of 1.2185 and the price eventually fell. So this is the neckline I'm talking about. If you go into a smaller time frame, you can you will be able to see the double top formation, something like double top formation very clearly, and yeah, that's the reason for the resistance. And the short-term trend is pointing towards bearish as selling pressure continues to build up from a near high of the entire market range between 1.2340 to 1.17 amid early tapering sentiments from the Federal Reserve due to persistently high inflation. So last week, the CPI data came out, and I think if I'm not wrong, it's about 4%. So it is still persistently high, and therefore there's a rise in the risk of inflation. And of course, at the same time, the price is currently at the top of this range, okay, this entire range I'm talking about. So therefore, it is very reasonable for the market to sell the euro as of now, and of course buy the dollar because of the anticipation they might taper earlier due to inflation. Alright, so this week we will continue to look for selling opportunities until it reaches the current equilibrium level, 1.20. Alright, this is the current equilibrium, as well as the bottom of the 2-month rising channel. So there's a lot of confluence right here. It is at the equilibrium level. It is at the bottom of a 2-month rising channel. So if 1.2 is not able to hold, we'll see a stronger selling towards 1.18. But otherwise, we can expect a rebound back to 1.2170. Alright, so if it breaks lower, this is the very next important demand zone, which is also at the bottom of this symmetrical triangle or the entire consolidation. And of course, if it rebound, we'll see all the way back to 1.2170, back to the neckline right here. Alright, so that is for the euro against US dollar. Maybe coming to the chart, if we go to a smaller time frame, alright, you'll be able to understand why am I waiting for a pullback right here. Right, you can see that the lows are getting lower, but you can kind of just see a falling channel right here, right? I don't even have to plot it out for you to see, and therefore we'll wait for the price to pull back to where? Of course, back to the neckline right here. Alright, so this is about 1.2156. Or let's just put it as 1.2160, somewhere near. As the price pull back to somewhere near to that level, you can definitely look for selling opportunity. All right. Now let's move on to the next one. Alright, for the gold, the bulls for gold are not able to make any progress, and if any, they fail to maintain bullish momentum, thus coming down. As you can see, last week it fell for 3 consecutive days. Last Friday, it's not able to rebound, but however, right, it is still sitting somewhere, still above the equilibrium level. Let's continue. Since the consolidation started at the beginning of June, gains have been swallowed constantly, and highs are getting lower. Alright, so this is the consolidation. Whenever it goes up, it came down again. So this is the problem we are seeing right now. The breakouts of the rising channel failed to continue. The price eventually fell all the way back to the bottom of the channel with little support towards the end of last week. So this entire channel, alright, is the channel I'm talking about. It kind of break out of it, but it's not able to continue to go up. And I've been expecting a parabolic kind of bullish wave going all the way up, but it didn't happen. In fact, it kept constantly resisted, and finally it fell all the way back to the bottom of the channel, and then it continues to consolidate and still seeing resistance at about 1900. Now it seems that buyers are reluctant to add more position ahead of the Fed's meeting, right? So weighing of an early tapering. However, we will focus on buying since the price is still sitting well above the equilibrium level of 1858. So I'll stay true to my buying bias because it is still sitting above the equilibrium level. Only when it comes down and breaks lower, a clean break and close below, then well, maybe it is still not the time for gold to rise, because right now we have to understand we are in the condition of a rising inflation. Central banks are already looking to taper their QE or money printing, whatever you call it, and eventually they may start to raise interest rate due to a rising inflation. But at the same time, rising inflation means to say it will be good for the gold. Alright, so that is the fundamental side we have. So let's continue. So this week, alright, we will still be looking for buying opportunities at the opening of the market, followed by the equilibrium level at 1858. So because right now we are still seeing that it is still kind of reading the rising channel. I mean, based on experience, sometimes at the very beginning of a week, if let's say last week is not able to go lower, there's a very good chance it might just jump all the way upwards. There is this kind of possibility, right? But of course, if we look at the chart right here, right now, it does seem that it is about to break lower and going towards the equilibrium level 1858. So, which is why if it goes lower, then we will look for buying opportunity again as it reaches 1858. So we want to keep in mind that the global economy is currently facing a high risk of fast rising inflation, and that always works well for the gold. Alright, so that's what I mean by the inflation. So if we come back to the gold, and if we were to go into the 1 hourly time frame, well, I would say that at this point of time, there's really nothing much we can do. So at the very beginning of this week, if we start to see price starts to climb, we want to wait for some sort of pullback and try to buy again, because right now you can see that the lows are still getting higher. All right, there's still a fact, and it's getting higher within this rising channel. So if it's able to come back into the channel, then I think we still have a case to buy. And if you look at this formation right here, it could be a rising or rather an ascending triangle. Well, I mean, if you want to look at that way, at least the highs are equal, the lows are getting higher, so there is still an opportunity to buy the gold prior to the federal meeting. And of course, if it goes down, like I said, just look for buying opportunity at the equilibrium level. All right, so that's for the gold. All right, next we have the NASDAQ. All right. So let's look at our weekly forecast. NASDAQ is potentially going to break a new high this week. All right, we are expecting to go up further, breaking new highs. And currently, we are seeing a clear bullish wave forming and continuing towards the top of a rising wedge. All right, so this is the rising wedge, very clear to our eyes. In my instances, the price is able to break out. In many instances, the price is able to break out of the pattern and peak higher before ending the trend and into another pullback. So what I mean by that is that at many instances, price does break out of this pattern, or in this case the rising wedge, goes up a bit higher, reaches somewhere and higher bits, and then it starts to go down. So based on what I analyzed, I think it can go to 14,500 before it make a turn. And all right, so this week we will buy the pullback, if any, at the beginning of the week and hold it till it at least reaches the top of the rising wedge around 14,200. So we want to wait for pullback. All right, later we go to the charts, to a smaller time frame to look at it, and then we want to try to buy all the way towards the top of the wedges. And of course, you can hold half the position and continue to wait for it to reach somewhere at 14,500 if it breaks higher. So should the price break out of the pattern, we expect to reach 14,500 right before making a turn. Now let's come back to the charts, going to a small time frame, 4-hourly time frame. Alright, so in the 4-hourly time frame, we do see that it is still rising. Alright, so every time it breaks higher, it comes back, retest the previous high. Alright, it goes up, retest again, then it goes up. So the same thing applies if it's able to come back down, retest the current high right here. Right here is about 13,850-ish to maybe 13,900. This is where we want to buy the NASDAQ again. Of course, the trend line right here does help us to look for a buy, to look for a support as well. So that's what I mean by buying the pullback, and then we'll wait for it to go all the way to the top of the rising wedge. All right, so why not just look at the previous high? I mean, if you look at the NASDAQ, you look at the chart entirely, you know that it is always breaking higher. Whenever it comes back to the previous high, it just keep on going higher. Alright, so we are not going to look at just the previous high. We will definitely aim for somewhere higher. Alright, so that's for the NASDAQ. Let's move on. Alright, next we have the US oil or the WTI. Let's look at the weekly forecast. So WTI continued to edge higher as inflation continued to stay persistently high again about inflation. At the same time, the price breaking away from a rising channel and closed higher on the last trading day as well. So it continues to edge higher, close higher. Alright, so this week we will continue to look for buying opportunities by waiting for the pullback towards 70, which is the bottom of a minor rising channel, very small right here. Right, we'll go into it later. Followed by the demand zone around 68.5. We continue to see the oil prices climbing towards the major equilibrium level at 76, which is the 21st century equilibrium level. Alright, so let's take a look at the chart itself. Alright, I've been very bullish on oil for some time, just as I did for gold, because of rising inflation. Very simple. I mean, big spending by government, hot money and stuff like this. So for the US oil, so what I mean by the bottom of the rising channel, the minor channel, all right, this is the one. So if you look at the 4-hour time frame, or maybe all the way to the 1 hour time frame, you will be very clear to your eye. So let's just wait for it to come back down to somewhere right here. That will be about 69.8.7 rather than 70. Then we can try to look for a buying opportunity again, and then if it breaks out, if it breaks lower, all right, break out from this rising channel, and this will be the obvious demand zone. I mean, you can see that this is a pretty nice breakout right here and provides some sort of demand at this region. So that would be, to be more accurate, would be about 68.7. all right, so that is for the US oil. And target wise, just keep looking higher. Alright, maybe back to the top of this channel for the first target, and all the way to 74.42. Why 74.42? Because that is the resistance level right here. Alright, just before the equilibrium level. Alright, so that is for the US oil. Let's move on. Alright, so last but not least, we have the Bitcoin, which is still running over the weekend. Alright, so Bitcoin continues to find buyers whenever it retests the 50% pullback low, which is right here. So with every rebound, the price, however, created yet another lower high, forming a downward pressure within the consolidation. So this is the consolidation, and the highs are getting lower. Alright, so that's what I mean. So the crypto market has been extremely vulnerable to any news from big governments, such as China clamping down on those mining rigs and stuff like this, and of course regulation from central banks, and of course to tweets from Elon Musk. So we continue to see Bitcoin under negative pressure, and will continue to look for selling opportunities awaiting pullback towards 36,650 and targeting 31,000. Alright, so that is the key word for you, I believe. So let's go to the smaller time frame into the charts and look at what I mean by that. So in the 4-hour time frame, right, we can see that this is the consolidation right at the low of the 50% pullback. So we can see that every time the price comes back down to this level, retest, it goes up, come back down, retest, goes up, come back down again, retest and goes up again. So last week we saw that it continues to find resistance at this running channel, and of course the highs are getting lower. So therefore we'll continue to look for selling opportunity. So if we go to the 1 hourly time frame, you can obviously see that this is the consolidation, and price broke out from here. So this area itself will becomes a temporary supply zone for us to sell, which is at 36,600 or 36,700. Alright, so that will be the more accurate price to sell actually. So do watch the weekly forecast video. Sometimes I may see something else when I'm actually doing the video itself. But I think if it's lower, slightly lower, should be fine. I mean 36,500, because that is the falling channel we can see right here, which will essentially forms a falling channel as well. Alright, just like it did back then right here. Okay, so this is what's happening. I'm still looking to sell towards the 50% pullback level. That's where you can take profit. So this time I'm just aiming at 31,000. Why is that so? Because obviously we are seeing the lows are getting higher. The lows are getting lower. So all the way into this demand zone, just before that will be about 31,000. So that's targets, and that's very straightforward for the Bitcoin markets. Alright, so with that, that is all for our weekly trading forecast. And thank you for watching. Again, if you like what we are doing, do hit the like button, subscribe so you get updated for our videos. So see you again tomorrow.